Hey everybody, welcome back to Hospitality 2108 Hotel Management. I know what you've all been wanting to talk about, and that's numbers. But really, accounting matters a lot. These next two chapters, accounting and revenue management, um, are pretty important because if you don't keep track of your costs and your expenses and your profits and losses and the money coming in and money going out, you're not going to stay in business that long. So let's see here if we can figure out what the profit formula is, right? It's right here. It's revenue minus expenses equals profits. In other words, sales minus cost equals profits, right? Um, Successful businesses generate revenues and incur expenses because it costs money to make money, right? Accounting is a process of summarizing, reporting, and analyzing your financial transactions. The front office accounting is the process of summarizing everything that happens at the front desk. Back office is the process of summarizing and documenting the financial activities of the entire hotel. So front office accounting, things that occur at the front desk. Back office, the entire hotel. GMs do not need to be certified public accountants, but they do need to understand the basic accounting principles used by a hotel's controller. Why? Why do you need to know this? So you can make sure they're doing everything above board, right? So a CPA, a certified public accountant, is a professional designation given to an individual who has passed a national qualifying examination related to accounting practices and principles. CPA designations are granted and administered by state boards of accountancy. A controller in a hotel is an individual or department responsible for maintaining the back office accounting systems. Right? Remember, that's the entire hotel. So what's GAAP? GAAP is the generally accepted accounting principles. Now, you're going to get tired of GAAP eventually because you have to take, I believe, an accounting class and then a finance class, right? But you need to keep up, okay? Generally accepted accounting principles are standards and procedures for preparing business financial statements to ensure uniformity, right? From the financial analysis down to the summary accounting, down to the bookkeeping. It needs to be uniform, right? That way anybody can come in, they can take a look, like, yep, I know exactly what they're doing there. Perfect. The purpose of bookkeeping is to record and summarize your financial data. An example would be the in-room sale of a movie or something from the minibar, right? The Uniform System of Accounts for Lodging Industry, USALI, it's a recommended and standardized set of accounting procedures that are used to report a hotel's financial transactions and financial condition. Um, Accurate financial information ensures good decision making. Accurate financial information ensures good decision making. Now, Sarbanes-Oxley is a law making it a criminal activity for a hotel or any other company's executives to knowingly provide investors with false information. Technically known as the Public Company Accounting Reform Investors Protection Act. This came about because of a company that, geez, you're probably too young to remember, Enron. So, and that's okay. Now, the accounting system, the main responsibility of a controller is to oversee the bookkeeping and accounting functions. This includes, but not limited to, development of the systems needed to accurately collect and report financial information. They need to be able to analyze financial information and to make finance-related recommendations. Now, accounting systems can be classified as either centralized or decentralized. A centralized accounting system is a financial management system that collects accounting data from an individual hotel or hotels, then combines and analyzes the data at a different central site. Makes sense? It's prevalent in chain operated or multi-property hotel companies. The company, not the individual hotel, will likely employ a CPA for data analysis. Now, a decentralized accounting system, it's a financial management system that collects accounting data from an individual hotel site and combines and analyzes that data at the same site. GM controllers and controllers take larger roles in preparing the financial documents. It is likely that hotel owners will employ the services of a CPA or qualified professional to review their financial statements that are prepared by the controller or the GM. Now, there's some tasks that the controller is involved with, right? In working with the GM and the EOC, the executive committee, will normally be responsible for managing revenue forecasts, the budgets, internal controls and reports, their financial statements and analysis, and the audits, right? Now, with the revenue forecast, the terms revenue and sales are kind of used interchangeably. Accurate revenue forecasting is an important part of the controller's job. Hotel revenue can be generated from a variety of sources, right? And here's a few examples right here. Transient guest rooms, all that stuff, right? Food and beverage. You got your business centers, your meetings and conference rentals. You're going to have your health club and spa at some places, casinos and gaming management. You might even have a tennis pro shop, right? Retail outlets, salons. And as I talked about with the bigger downtown areas, your parking. Now, accurate revenue estimates are essential for assisting GMs in the decision-making process for all of these areas, right? A hotel's budget is an estimate of its revenue and expenses for a specific period. The development of the budget assists the hotels by allowing management to anticipate and prepare for future business conditions. Provide a communication channel whereby the hotel's objectives are passed along to its various departments. It helps by encouraging department managers in the preparation of the budget to establish their own operating objectives and evaluation techniques and tools. Providing the GM with a reasonable estimate of future expenses, levels, and serving as a tool for determining future room rates and other price structures. It helps the controller and GM to periodically carry out a self-evaluation of the hotel and its progress towards achieving its financial goals, right? A long-range budget, because there's three basic types of budgets, right? The first one we're going to talk about is long range, 2 to 5 year. Useful for long-term planning, considering the wisdom of debt financing, right? Refinancing, scheduling of capital expenditures. A capital expenditure is the purchase of equipment, land, buildings, or other fixed asset that is necessary for the operation of the hotel. Now, the annual budget in large multi-unit companies, annual budgets are produced by individual hotels and submitted to the central office for review. It's developed to coincide with the calendar year. They are more detailed and there's less fluctuation based on unforeseen events. So the long term is 2 to 5 years. The annual is based on the calendar year, right? And obviously, as you can see, we're going from far out down all the way to a monthly budget. And a monthly budget helps determine whether a business is maintaining their progress towards the goals developed in its annual budget. These are great for seasonal hotels or hotels whose revenue and expenditures vary greatly depending on the time of the year or tourist season, right, of the year the hotel is operating. Examples include hotels near ski resorts, beaches, theme parks, some tourist areas, sporting venues, etc. During their busiest periods, these type of hotels will sell most or all of their rooms at rack rate. Now, what is the rack rate? The rack rate is the price at which hotel sells its guest rooms when no rate discounts of any kind are offered to the guest. No discounts of any kind are offered to the guest. So the controller has to deal with a few things: internal controls, cash, right? Good controllers help GMs by developing and implementing policies and procedures that are designed to ensure the security of the hotel's asset. Cash, when we're talking about cash, we're talking about the loss of asset to theft, fraud, or outright carelessness that always exists. It is essential to enforce a system of checks and balances and controls that are designed to ensure the security of cash assets. Now, some common pay card related techniques used to defraud guests include selling the credit and debit card numbers of guests to unauthorized individuals. Sometimes that's referred to as skimming. Charging guests payment card for items not purchased and keeping the money from the erroneous charge. Changing the totals on credit card charges after the guest has left, or imprinting additional card charges and pocketing the cash difference. Whew. Right? Sometimes it's incorrectly adding legitimate charges to create a higher than appropriate total with the intent of keeping the overcharge. Charging higher than authorized prices for products or services and recording the proper price and keeping the overage. These are all things that happen. GMs should monitor the quality of the cashier-related security programs designated by the controller, right? Now, there's a few methods here that we'll use to help evaluate the cash control systems, such as the cashier training programs that we have in place, sales revenue recording systems, cash overage and shortage monitoring systems. So you're going to want to try to find if there's any kind of pattern going on. And it helps, just like we talked about in previous chapters, determine whether or not it's likely that you have a problem employee who might be shorting people or shorting the cash drawer. Disciplinary actions for noncompliance with approved procedures is another thing. Accounts receivable, so direct billing. What is direct billing? It's an arrangement that allows a guest to purchase hotel services and products on credit terms. So guests or groups who are seeking credit would complete a direct bill application. If you look in your text, it's under figure 6.3. When a hotel extends credit to guests, the dollar amount of outstanding charges owed to the hotel by these guests is called the hotel's accounts receivable. Now, accounts receivable is the money owed to the hotel because of sales made on credit, right? The controller's job is to establish which guests will be allowed to purchase goods and services on credit, how promptly and frequently those guests will receive copies of their bills, the total amount owed to the hotel and the length of time the money has been owed. The credit worthiness of guests is a common debate issue between the marketing and sales area and the controller's office. The controller's office tends to take a conservative position, while the marketing and sales office demands that the controller extend credit. A controller and a GM establish credit policies to maximize the number of guests doing business with the hotel, yet minimizing the risk of creating uncollectible accounts receivable. Make sense? Good. Accounts payable. So suppliers and service companies provide goods and services on a credit basis. Then these vendors bill the hotel according to the credit terms previously established. Accounts payable is the sum of all of all current invoices owed by the hotel to its vendors for credit purchases that are made by the hotel. There are 4 major concerns in the accounts payable system. Payment of proper amounts, payments made in a timely manner, payment records properly maintained, and payment totals assigned to appropriate departments. So let's talk about payment of proper amounts. Sorry about that. Where was I? So the payment of proper amounts, right? It's the payment made to vendors only for the goods and services actually received. Payment withheld if services have not properly been performed or completed. So for a hotel, if you have a vendor who drops off linen, right? You're going to have somebody who is going to receive that, and they're going to have to count and make sure that the actual count received is what they are charging you for, and that they're in a condition that is acceptable for use within your property. Payments before accounts payable invoice is paid, you have to check the terms of sale, product prices quoted by the vendor, and list of products received against the actual vendor's invoices. You know, it's the dot your I's, cross your T's, and all that good stuff. Make sure that you do a little CYA and you cover yourself so that way you're not overpaying for products and services received. You want to make sure that your payments are made in a timely manner. Maintain good relationships with your vendors by prompt payment of invoices. Take advantage of discounts offered by vendors for prompt payment. So here's the thing. If you consistently pay late, they're not going to give you any slack, and they're not going to give you any discounts. But if you're constantly right on top of it, some offer discounts if you pay quickly and on time. So save money any way you can. The payment records are properly maintained. The controller must create and maintain a system where total payments made to vendors match the vendor billings exactly. Okay. Has to match it exactly, right? Your debits and credits need to even out. Payment totals assigned to appropriate departments, right? So you're going to have a coding system if you're the controller or the GM who's taking care of this, that makes sure that with coding, it's the process of assigning incurred costs to a predetermined cost center or departmental expense category. It's just making sure that you are able to keep track of your budget a little bit more accurately. If one center is off budget, it's easier to track if you're doing this than if you're not. Make sense? I hope. All right, so some daily operating stats. The manager's daily sales report is one of them, but the daily operating statistics is an accurate recap of the prior day's rooms, food and beverage, and other departmental revenues, and it is often referred to as a manager's daily sales report, or more simply, the daily. This is usually prepared from data supplied by the PMS. Now, the PMS is the property management system. It refers to the computerized system used by the hotel to manage room revenues, rates, assignments, reservations, and other select guest service functions. There's information that's typically included in the manager's daily report. For rooms, it's going to be the number of rooms sold, number of rooms that were available for sale, your occupancy rate, your ADR. Anybody remember what the ADR is? It's your average daily rate, or what RevPAR stands for, revenue per available room, and other room revenue information that is desired by the GM. For food and beverage, it could be the restaurant sales, the bar and lounge sales. How much money did you bring in from renting out the meeting rooms, banquet and catering sales, or other food and beverage revenue information that is desired by the GM? Other departmental revenue could be laundry, guest laundry, movie rentals, no-show billing, telephone revenue, which really isn't much of a thing anymore, but you still get a little bit. Now, there's a detailed room revenue statistics thing. Documentation and verification of a night auditor's report is an important function of the controller's office. The night audit report provides a wealth of information on room sales and related transactions. A night auditor is the individual who performs the daily review of summary of guest transactions recorded at the front desk. The night audit report is used by the controller to verify the guest payment card charges, the amount of cash on hand, revenue sales total, the detailed room stats, allowances and adjustments, that type of stuff. Now, allowances and adjustments, that they are the reductions in sales revenue created to guests because of errors made when recording sales or to appease a guest for property shortcomings. It happens. A detailed room revenue report includes the rooms available, total rooms occupied, rooms occupied by guest type, business or leisure, occupancy percentage, the total ADR, ADR by guest type, and the total RevPAR. Now, transient guests are guests that are neither part of a group booking or a tour group. Transient guests can be further subdivided by traveler demographic to gain more detailed information about the type of guest staying in your property. The financial statements, the controller's office is responsible for preparing the financial documents that summarize a hotel's financial performance. Some key financial documents would be like the income statement, the balance sheet, and the statement of cash flows. Now, a balance sheet illustrates the value of a business, right? It's often described as a snapshot of the financial health. Here we have the balance sheet formulation. It's the assets minus the liabilities equals the owner's equity. A balance sheet is a report detailing the assets, the liabilities, and the owner's equity of a business. Assets are the amount of cash and property owned by a business. The liabilities is the amount a business owes to others. And the owner's equity is the amount remaining after liabilities have been subtracted from the assets. assets list the value of a hotel's property and equipment, their fixed assets, less any accumulated depreciation or amortization. Now, depreciation is the process that we use to lower the value of a tangible asset during a specific accounting period because it is assumed to have been used up during that period. Amortization, and I always mess that word up, so sorry, is a process used to lower the value of an intangible asset. Now, liabilities of current and long-term liabilities are debts paid within a year. Long-term liabilities are debts typically paid longer than the next 12 months. Your retained earnings are the accumulated amounts of profits that are earned over the life of the hotel, which has not yet been distributed to its owners. This is the final entry on the owner's equity section of the balance sheet. Now, the balance sheet does not take into account the value of the staff operating the hotel because they are not owned by the hotel. An income statement is a financial report that records hotel revenues, expenses, and net income for a specific period of time. The income statement is also known as the statement of income or the profit and loss statement, P&L. In no case should this period exceed middle of the next reporting period. If you look at figure 610 in your book, you will see a hotel statement of income. Now, there's a statement of cash flows. That's a report detailing the impact and cash holdings of a business's operating, investing, and financial activities. A statement of cash flows can answer the following. How much cash was provided by the hotel's operation during the period? What was the hotel's level of capital expenditure for the period? How much long-term debt did the hotel commit to during the period? Will cash be sufficient for the next few weeks, or will short-term financing be required? At what time of the year does the business generate or spend the most amount of money? It is critical that a hotel is not only profitable, but that it maintains solvency, or the ability for the hotel to pay its debts as they come due. Okay? It is critical that a hotel maintains solvency. All right, a statement of cash flows also shows the effects on cash from operating activities. That's all business transactions and sales activities. The investing activities, purchasing assets to increase future financial returns or income. Your financing activities, you got to know the hotel's cash holdings, right? If you look at figure 6.11 in your book, it's going to be this information here, but in a figure. And it's supplemental information related to non-cash investing and financial activities. So sometimes you need to disclose specific items separately. All right, so we also have the task of the controller to do auditing. So an auditor is the individual that conducts independent verification of financial records. So this is not going to be the controller who does their own auditing, because they would not be an individual conducting an independent verification, right? There'd be a conflict of interest. Of course, they would say that their records are right and that there's nothing wrong there. If you have somebody verifying their own financial records, you're going to get into trouble. An auditor does not examine every financial record produced by the controller's office. The auditor inspects a sample of records from a variety of areas to determine whether consistent bookkeeping practices and standard accounting procedures are used. The auditor, there's an internal audit, which is a verification of financial records performed by members of the organization that is operating the hotel. It can be cost effective in multi-unit hotels. An external audit is an independent verification of a hotel's financial records performed by those who are not directly employed by the organization operating a hotel. Completely outside, independent, and it's usually a pretty good route to go. Anyways, I've been Dr. Mosley, and you've been awesome. Till next time, take care.